in this course is to take you from the absolute beginner to someone who can confidently understand how market works, how to read charts, how to make trading decisions step by step. So today in the first class, we'll build a strong foundation because before you touch charts or place a trade, you need to understand what trading actually is, how market function, how moves the price or who moves the price and what tools traders use daily. So for starting, I will tell you what exactly trading is. So, trading is the act of buying and selling financial instrument like stock, currencies, crypto, or commodities to profit from price changes. So, basically, what I'm trying to say here is, for example, if you buy, uh, let's say, gold. So, just a second. So, right now, gold is trading at 4,990.83 US dollars. So, if you buy this gold here, so you have placed your trade here. So and if the price goes up in the future, like near future, like 1 or 2 hours, it goes up to like $5,000. So the difference between 4,090 and $5,000 will be your profit. So that's how trading works. And the difference between trading and investing is mainly time and intention. Trading is equals to like short term profit from small prices changes, and investing long term profit from business growth or value appreciation. So, for example, in the trading, you can buy gold, you can buy commodities, you can buy forex, and you can buy like stocks of the companies. And in the investing, you can invest in some companies or you can invest in the real estate, in which in investing it is really long term game. So, for example, you buy Apple share at $150 and sell them for $155 in 2 days. You made just $5 per share, but an investor buys apples and hold it for years because they believe Apple's growth. So let's move on. So let me tell you why people actually trade. So now, why do people trade? There are mainly three reasons. First is income. When people trade daily or weekly for regular income. Second will be the wealth growth. Some trade to grow their capital faster and fixed deposit or mutual fund. Third is freedom. Trading gives flexibility. You can trade from a laptop anywhere. So basically, it's freedom. You can trade sitting at your home, sitting at your office, anywhere in the world, basically. But remember, the freedom comes at risks. Most new traders lose money because they skip learning the basics, exactly what we are covering here. Let me give you an example. Think of trading like driving. Everyone can buy a car, but not everyone knows how to drive safely. If you drive without training, you'll crash. And same with trading. So basically, if you will trade without knowledge, you're just gambling your money. So first you should have a nice knowledge of trading and then you should trade. So next, moving on to the next topic, we are going to cover the types of financial market. So now let's break down the different type of the financial market because as a trader you can choose which market fits you best. So now let's move on to the on the screen and I'll show you how those market works and what are the pros and cons. Yeah, so first there is stock market. Yeah, so first there is stock market. In stock market, you can trade or you you trade ownership of companies, like you trade in shares. So for example, if there is Apple, this is the share name of Apple, and for example, let's say Apple has 1,000 shares which are floating in the market, so 1,000 people can buy each share. So for the share price of Apple right now, it's I guess $150 or $250, I'm not sure. So this is what you do in stock market. You trade in shares. For example, Reliance, TCS, Apple, Tesla. There are many stocks available in the market, and you can trade on them. And but the main thing in the stock market is it's only open from Monday to Friday. Saturday and Sundays are closed. Remember that. So you cannot trade in these specific window. And in many countries, you can only trade from 9 a.m. to 3:45 p.m. max. So this is the only time window you can trade in stock market. So let's say if we go on to the share, let's say we can open the Apple share. So here you can see Apple Inc. So right now its share price is 268.747 USD. And you can see that market is closed right now because the price is not moving up or down. As right now it's 7:45 p.m., so that's why the price of this is closed. Nobody can buy or sell right now. They can only sell tomorrow in the morning. So that's how stock market works. Now let's move on to the forex market. Forex market. So in forex market, we can trade in the currencies, and they come usually at in the pair. So like Euro USD, this is the most famous currency pair. Second, you can go with USD JPY. So USD is the currency of America, USA, and JPY is for the Japan. And another one is GBP INR. So these are some famous currency pair in which you can trade in the forex market, and this is the world's biggest market. For example, in stock market, the market cap of stock market is around $7 billion per day. So what does this mean is, in per day, the stocks market, the stocks or share we can say, are regulated, and the amount is $7 billion. And the forex market is $7 trillion. So it's huge, and the best part of the forex market is it is open 24/7. So doesn't matter what time your job is or anything else, or you're studying, you can still trade at the night on 2 a.m. or it is 7 a.m. You can trade anytime in the world. So that is the best thing in the forex markets. And now let's go to the chart of forex market so I can give you an example. So Euro JPY, let's say Japanese yen. So right now it's trading at 178 JPY. So that's how forex market works, and you can see here market is open right now. So that's how forex market work. Now let's move on to the third market and come back to my screen where I can show you. So third is crypto market. So biggest cryptos in the world, you might have heard about it, is BTC, which goes for Bitcoin, and another one is Ethereum, ETH. Crypto market is basically same as forex market because it is open 24 into 7. So you can trade 24 hours and 7 days a week. And now let me show you the chart of crypto market. So let's go to BTC USD. Here it comes. So right now the price of Bitcoin is 1,06,277 USD, which is pretty high. High of like it's high of all time right now, I guess. Yeah. So that's how for crypto market works. So let's move on to the fourth market, which people don't prefer much to like trade. But yeah, in that market, the gold is really famous, gold and silver basically. So the fourth market is commodity. In this, people trades on gold, silver, oil. Basically, people are buying digital gold, digital silver, and digital oil. So for example, let's again move on to the gold chart. So right now the gold price is $4,084. So it's like buying a gold worth of this much and just wait for the right time to sell it off. So after like 1 hour, let's say it goes up to here. Let me draw a line. Yeah, so after 1 hour it goes up to here. So the difference between 4,083 and the difference of 4,130 will be your profit. So basically you are profiting here from like $50. $50 will be your profit. So that's how gold market works and commodity market works. And the best part about this also is you can trade 24/7. And at the last, the concept is same in all: buy low, sell high, or sell high, buy low. You're earning from the price difference. That's how trading works. And make sure you have to comment that which market is best and which one you like and which one you want to trade in. So let's move on to the other part of the video in which I'm going to tell who are the market participants. So now let's look at who actually moves the market. There are four key players. So you might be thinking why the price is going up or down. Like who is the one behind this? Like how this price works. So basically, first there are retail traders, people like us who trade in the small capital. Those are called retail traders. So retail traders are people like you and me. So we will be falling in the bracket of retail trader. So why we are called retail traders? Because we trade in small volume but large in number. And the second one is institutional trader. So institutional traders, there are people like banks, not exactly peoples, they are organization, banks, hedge fund, big corporation. Those who trade in very big capital for like 5,000 crores, or we can say like very big, like $100 million, for example. So people, those who trades in this much of capital are considered as institutional traders. So, after that, there are brokers. Brokers are basically the platform on which we trade. So, basically, it's middleman. So, last one is market makers. So, market makers are basically who provides liquidity so you can buy or sell instantly. So let me give you an example. Imagine a vegetable market. Institution are the wholesale dealers and broker are the shopkeepers and we retail traders are the customers buying or selling in the small amount. So basically we are going to the shopkeeper, those who are brokers, and we buy vegetables from them. Now you might think retail traders can't compete with institution, but that's not true. Retail traders can win by being smarter, faster, and more disciplined. So let's move on to the next topic of our video, which is market session and timing. Market session and timing. So trading happens at specific times depending on which market you are in. So there are four sessions. First is Asian, second is London, third is New York, and fourth is overlap. So in Asian, the time is 5:30 a.m. to 1:30 p.m. IST, and in London session, it's 12:30 p.m. to 9:30 p.m. IST, and New York session it's 7 p.m. to 2 a.m. IST. And believe me, the New York session is best for the trading in forex because lots of the institution and big hedge fund managers are trading in this time session. So in the overlap session, it's basically London plus New York session. These both sessions are the trading at the same specific time, which is 7 to 9:30 p.m. So you can see the difference here. The London session ends at 9:30 p.m. and but New York session start at 7 p.m. So the difference between this is called overlap. So the overlap is where most action happen because both major financial center are open. That means more liquidity, higher volume, and better volatility for trading. So let me give you an example. Let's go to the trading view, select Euro USD. So let me add an indicator here, which is called session break. Yeah, this one. I think that this particular indicator is not working. Let's find another one. So you see these white lines, dotted line. So these are basically session. So if you go into the indicator setting, you can see why it's called white and why it's the line is like dotted line. So you can see the sessions here. So that's how session works. So this is why professional traders are only trading during high volume times, because when volume is low, market moves like a weak and unpredictable. So it's obviously you can understand this. If the volume is low, like someone is selling very low, then it's really difficult for a trader to predict where it will go. The price will go up, or it will go lower. So now let's move on to the live demo where we will be reading market data. So now let's open TradingView and see how all this work, how all this looks in the real time. So let's go to the Euro USD. So basically, wait, let me delete the indicator first. So this is the chart and the time frame is 30 minutes now. So if we'll go into like day, so right now you will be seeing the chart of daily time frame. So you can see the candle here. So this particular candle, like starting from here, and this particular candle represents a day, and the candle just at the side from this box is the candle from today. So you can see here it's the time, it's 7 hour 29 minutes are remaining in closing of this candle. So that's how candle works. And let's go into the indicator. There are some indicators which are really useful. So let's say you can add an indicator called volume. So in this it will show you the volume. So this green, it means someone is buying 74.85k volume. So that's how volume indicator works. And after that, there are various time frame you can trade in. So for example, this is day, this is 4 hour, this is 1 hour. So that's how you can select. And the best part of this time frame of daily is, so like you can select this candle, you can mark the lowest part and the highest part. So from there you can predict where the market will go. For example, if the market was here at the closing of the previous day, then it might go up. And you can see it here. If we delete it, the market has tried its best to go near that price. So that's how you can predict the market. And if I select the 10-minute time frame, then you will see the candle of 10 minutes. So I've selected 45 minutes right now. So the candle you are seeing here is the candle which represents 45 minutes of this chart. So what has happened in the past 45 minutes? So if you see a green candle, it means price closed higher than it opened. Buyers were strong. If the red candle, if there is a red candle, seller were stronger. That's literally the battle between buyers and sellers shown visually. So here you can see the price moving down from the previous candle. So it means that sellers are more powerful here. So now let's move on to the next topic, which is the concept of liquidity. The concept of liquidity and volatility. So you will often hear two important words in trading: liquidity and volatility. So liquidity is how easily you can buy or sell without big price change, and volatility is how price moves up and down. So let's compare Bitcoin high volatility versus USD versus JPY, which is low volatility. So if we go to the BTC chart and open this, and we can add an indicator called volume. So in this you can see that 6.62k is the volume here. So what does that means? That 6.6 bitcoins has been sold here. So that's how it, that's what volatility means. And if we go to the lower chart, in which, so let's say Shiba, if we go to the Shiba and see the volume meter here, it is not even showing it. So basically what it means, that there is really low, like there are very few people that are selling here or buying here. So that's why you can see the graph of it, it's very constant. So let's recap, and let's wrap up this first class. Today you have learned what trading really means, how it's different from investing, the four major types of market, who are the main players, how market session and timing affect volume, how to read basic price chart live. And remember, trading is about understanding how price move. In the next video, we'll go deep into the market structure and price action, now trends form, what support and resistance means, and how professional read the chart.